Hello again, everyone. This is Ken Kibler, Director of Client Profitability for eTruckBiz. We're about a minute shy of the top of the hour. The attendee list is still growing, so please sit tight, and we'll get going shortly after the top of the hour. Very much. All righty. Well, the attendee list seems to have leveled off. Once again, this is Ken Kibler, Director of Client Profitability with eTruckBiz. I want to thank everybody for joining us today. As we know, everybody's heading into the holiday week, and we'll talk a little bit more about that and some of the volume levels, as well as some of our other normal topics. As always, if you have any questions, please put them in the chat or the Q&A. And without further ado, I will turn this over to Jeff Walzak.
Okay, as always, we let you know that eTruckBiz is not endorsed, sponsored, approved, or otherwise affiliated with FedEx Corporation. Oops, did it again. Did it again.
That's a new graphic.
It's a new thing. Why is that happening? So, looking at the volume trends, and Ken's going to tell you something here in a second, but on the pickup stop side, doesn't look too bad, but as you know, those of you who've been around a while know that when you get into a holiday week, some of the trailer spots dry up, and instead of putting them on the trailers, they'll have a van come get them. Maybe that's what we're seeing there. Who knows? The volume on the vans looks like it's going up, but on the delivery side, ain't so good, which would be some of your major shippers probably drying up a little bit. So delivery stops, as I'm sure y'all know, are down pretty big. And then same thing with this, the packages are down a little bit, but they just broke that trend line. That's not so good. So that means on the productivity side, remember, we got to be able to demonstrate proficiency to FedEx Corporation. And I think that there are some problems out there. Actually, we know there are some problems stemming from this out there. We look at so if you know the volume is backing up, are we adjusting accordingly? Okay, good job. That looks good. As far as routes dispatched goes, we didn't dispatch as many. That's good. But stops per dispatch still kind of hanging where it is. So, Ken, you got something you want to tell everybody?
Yeah, and July is historically a very, very slow month just because it's a big vacation month. As Jeff said, some of the productivity slows down on those trailer spots, which means because in those distribution centers, people are taking warehouse, so they might not be able to process as many packages. And of course, if they are not processing as many packages, that means less packages into your trucks and stops. And with this week in particular, some people might be taking off the whole week, but definitely most places are closed Thursday, and a lot of places are going to close on Friday. So you got to anticipate you're not going to have significant overnight volume on Friday to deliver. So you're going to be light on Friday. Same thing on Saturday. You're going to lose the 2-day volume on Saturday and the overnight volume on Saturday. Sundays, for those of you that still have to do it, are going to be light, and it's going to trickle into Mondays. So you're going to have to plan accordingly. You're going to have some absenteeism as well. So what do you try to do? For me, that should help you condense the routes. Don't replace the people that call off. And then one of the things, if you do pay holiday pay and you're trying to avoid absenteeism, make sure you remind your employees that they have to work the day before and the day after a holiday if they're scheduled to receive that holiday pay. So please, please plan accordingly. You don't want to lose a whole week of productivity. Your P&L statements just can't handle that. So plan accordingly, plan for absenteeism, and plan to put the work on the drivers. But your volume Friday, Saturday, Sunday, and Monday will be extremely low. So that's all I have, Jeff.
Okay, we also want to ask the question, do you know how many stops per dispatch you have out there today? How many weeks in a row have we been asking that one? We're going to ask it forever. How many do you got? How many do you got? Do you know?
Also a great question for you to ask your BCs every single day.
All right, looking at the news, as many of you may or may not know, FedEx reported earnings not only for the quarter last week, but they also reported earnings for the fiscal year of 24. So 24's fiscal year ended May 31st. The new fiscal year 2025 started on the 1st of June. And they look pretty good. Earnings actually delivered for 2024. It was a good thing. They're looking for, not only were earnings good, and we'll get further into it here in a second, but one of the first things they mention is the fiscal 2025 outlook, which is interesting. Usually they want to go back over the year and how great it was. And actually they had a pretty good, relatively good year. But the first thing they want to know, including going forward, they want you to know that that they're going to try to save $2.2 billion and drive cost savings, right? So another thing, one of the things that happened in 24 though, is they bought back $2.5 billion worth of shares and paid dividends equaling $1.3 billion. That's how they got to $3.8 billion. So if you're a shareholder, hint, it's looking good, right? And all these things, when they buy back, when a company buys back its shares, that's a sign of a healthy business, right? The revenue, when you look at fiscal 23 versus fiscal 24, it was up a smidge, but it, kind of looked flat. And the question is, would it have been down without a little bump from the UPS strike threat? Right. So those of you that pay attention to what's going on, UPS's volume is not very good right now. So anyways, that's good for FedEx. So, but look at the margins, right? Look at fiscal 23, 6.9% margin, 24 up to 7. So, 0.1% doesn't seem like much, but a big old company like FedEx, that's a pretty good thing. It's a good thing. Now, if those of you that are in the ASM program know that we try to get you up over 15%. We've got some folks that are actually on here. I see your names on here that are doing better than 20. So that's how you compare with the parent company. Some of you aren't doing so well. We can get you in that program, but we'll get to that here in a little while. Ground, and this will be the last time I think they're going to report ground reports separate than anything else. Ground on its own had its best year ever. it had about a 13%-ish operating margin. So good job. Good job out there, ground folks. Definitely the shareholders will take it. Up $50. I'll take it. I don't know. That's not so bad. $50, 20%. That's really good. That's outstanding growth, but that's not just what happened. Usually a stock price reflects what shareholder or investors think is gonna happen, right? So that's a really good thing. So some notes from the earnings call, like I said, ground on its own had the best operating earnings ever, thanks to CSPs and maybe a little help from UPS, right? So that's good. One of the things they mentioned during the call was many times is real-time visibility. It came up a lot. Raj mentioned it several times for different reasons. So one of the reasons was they're going to go hard, and so is UPS, after the medical shipment business. And to do that, you got to know where something is all the time, not just, well, I think it's in between two different terminals or something like that. You have to be able to track stuff in real time. So they made a big deal about that. And also he touted real-time visibility into the operations, and that's why things are getting better from a margin standpoint. And there's a lot of reasons, but real-time visibility. And as you know, we help you guys with real-time visibility in your own operations. One of the things that stood out, at least to me, was, is Canada the new TNT? I don't know if there's anybody on here that knows what's going on with TNT or remember the whole thing. TNT is the European operation that FedEx bought several years back. There was questions asked about, well, is Canada done? Is it finally integrated Network 2.0? They said, well, no, Canada Network 2.0 will be expected to be completed Q1 of 2025. Got some bad news for you. That's what they said several quarters ago, that it's about done. So is Canada the new TNT? And did Canada put the whole integration thing behind a year or so? I don't know. I don't think they would say that, but we can say that we think that's the case. There is going to be a 10% dividend increase. So that's make the shareholders happy about that. They announced another share buyback program. So remember last year, what did I just say? 2.1? Can't remember what I said. The 2.5 or 2.1, something. But they're looking for another 2.5 billion in fiscal year 25, and 1 billion of it is going to be done in the first quarter of the new fiscal year, which is interesting. They announced to shareholders that they expect to get 10% plus our operating margins. So we just saw that they were at 6.9%, then at 7%. That's good. But now they said that they expect to realize 10% or better operating margins. So that's a pretty bold call, but is it really? As the express volume moves over to ground, or as now the operations, as you go through 25, as the operations combine, I don't know that that's that bold of a call. That's actually might be a bunt. We'll see. And then there was the big thing that came out of the call. So FedEx is exploring, in this case, this says divestment of the freight business. So those of you that are transportation industry junkies know that that's a big deal. So it says, this was from the article, FedEx is conducting a strategic analysis of the company's less than truckload segment and its relative value to the company, suggesting that FedEx Freight could be sold or spun off so the company can focus on its parcel and logistics business, right? Where have we heard that before?
I could think of a place.
Where? Where would
I
you?
don't know, they drive brown trucks, I think.
Interesting, huh?
Yes.
With the recent completion of the fiscal year 25 planning process, we have turned our focus to the next phase of our long-term stockholder value creation plans. As part of this work, our management team and the board of directors, along with outside advisors, are conducting an assessment of the role of FedEx Freight in our portfolio structure and potential steps to further unlock sustainable shareholder value. So FedEx Freight is the corporation's best performing segment with operating margins of 20% each year the past 2 years. In the LTL industry, that's tremendous.
It's unheard of.
It's the best of them all, actually, compared with margins of 11.8% for ground and 2% for express in 23. During the fourth quarter, operating income increased by $58 million as focus on revenue quality and cost management overcame the soft demand environment. That's corporate for bad economy and drove higher yields. Freight, this is important, Freight is the largest LTL carrier in the nation and is extremely efficient with an operating ratio, we already said 80%, second only to Old Dominion. About that. So some guy named Satish, the founder of you know who he is. The best option for maximizing shareholder value is creating an independent company with FedEx Freight, the largest LTL carrier in the nation, and issuing shares to current investors here. So he's saying, well, you will have a greater shareholder return with a spin-off to the public market, not a sale. Because the next largest carriers, Old Dominion and Saia, don't need freight, and it's too expensive for anyone else to buy. So would they consider spinning it off if they're trying to raise cash? Just want you to think about that for a second. So anyway, last week, I think it was last week, if you recall, we talked about UPS and the strike going away, and how the CEO said we're getting all the business back, and then oh no, they're cutting jobs at UPS, and they sold RXO. By the way, they sold something else recently too, did they not? What was the name of their truckload carrier?
UPS Freight. At one time it was overnight freight, but yeah, it's UPS Freight that they sold to. Gosh, I'm drawing a blank on that name of the goods.
I know. I saw them. I can't remember. Anyway, they sold the truckload portion off. That's another thing they did. And they sold this one at a loss. And remember last week, we really couldn't figure out why they were doing it other than to raise cash, right? So that's what we said. And then here's somebody else that then Ken just said it, as UPS positions itself to become the premium small package provider. Is that what they were saying when they bought it? No, they bought it, they want to make money. So we said, oh, look, UPS trying to raise some cash. You wouldn't sell all that stuff unless you were. So both UPS and FedEx selling off non-core business segments. Non-core to what? To focus on the small package business? Really? Why would they do that?
Said they're definitely raising cash for some purpose.
What would you need if you were going to enter a price war with your competitor?
Cash is always good.
Comparable services? Yep. Low cost advantage? Oh, we'll look at that here in a second. Cash. If you're going to get in a price war, better have some money laying around just in case you got to buy some business. Right? It might be the way UPS thinks it can regain business lost from the strike threat. They want folks to think they got it back or everything's okay. It's not what's going on over there. So we're just saying that. So which side of the fence do you think the grass is currently greener on? So here's what we think. If you are the low cost provider of the service, those of you that have come to any of our events and whatnot know that we go through why FedEx is. If you're the low cost provider, then you can't be priced out of the market. UPS is actually struggling. Didn't we talk about this the other day, Ken? It'd be interesting. Everybody wants, the headline is, oh, the Teamsters got a huge concession from UPS. Did UPS get anything out of the last
Absolutely,
negotiation?
they absolutely did. They got concessions on productivity, that they got concessions on uh, work hours. You used to be able to file agreements on every, if you were dispatched over 9.5 hours, 2 days in a row. And then also for APVs. So they did not lose the ability to use those at all. So the Teamsters did tout this big victory, but if they wanted UPS to pull the APV, employ more Teamsters, they would have done that. But it was a big victory for UPS to keep the APVs.
So there's that, but you said something about UPS basically keeping the trucks on the road longer.
Absolutely.
Why is that a good idea for UPS?
The longer that truck is on the road, the more revenue it's generating, and the less number of trucks that they have to dispatch, which saves them fuel and hiring more employees.
So their stops per dispatch
Have
went up.
increased.
It's up because those guys are out longer, right? They're
That is
taking,
correct.
that's the game, folks. That's it. You know, we've heard it. That's it, what it is right there. So yeah, they might be making more money, but it's because they're working more. Right? Funny how that works. Anyways, you can't be priced out of the market. The winner of the game is FedEx, right? The contractor model, as it has for 35 years, finds its way to the winner's circle again because the low cost provider of the service is what wins. So I'm hoping, oh, one more thing. As a public service announcement, I know there's a couple of you on here that are in this position, but we may have to limit our enrollment in the ASM program due to strong response. So if you're on here, and there's a couple of you on here I know are, you need to think about getting this going sooner rather than later because we only have a limited number of spots for you. All right, now there's that. And Ken, you want to see if there's any questions?
Yes, please. We threw a lot at you here today. And yes, the earnings were great for FedEx. Now, are contractors worried that it's going to be done on their back? No, but are they going to force you to have to be an efficient operation? Absolutely. So much so that they put it in the contract, correct, Jeff?
It's that way, yes, sir.
That you have to demonstrate proficiency. And we've seen over the last 2 weeks, I know of two CSPs that have walked away, some of them long-term contractors, uh, because they didn't think it was a fair deal from FedEx. I looked at the deal what FedEx was offering them. They could make money at that rate. But once again, it's that demonstrating proficiency. So don't fear that. As long as you're willing to put the work on the drivers, you can make that return that you want to make. So please don't fear it. FedEx is not going to make the money off of just by taking it away from you. Are they going to make you earn it? Absolutely. Are your drivers going to have to earn it? Absolutely. So hopefully there's, there's not any apprehension there, but does anybody have any questions about the earnings or uh, about the Administrative Service Manager program? Jeff, we don't have any questions today.
It's okay.
So just to reiterate, once again, extremely light volume Friday, Saturday, Sunday. Expect pickups to close early on Monday or on Wednesday. So
So you got a question there,
yeah,
Ken.
yeah. So the guess is that freight will be sold. What do you think? Do you think it'd be sold rather than spun off, Jeff?
They're gonna do something with it, that's for sure. If they really think that there's some sort of, and it looks to be like they're shaping up for this, but if they think there's really gonna be some sort of war, and yeah, they'll do something to raise some cash from it. Is it too big to sell? That could be. That's what they're trying to say. That's what Satish is trying to say. If you spin it off, I don't know how you get any cash from that. Yeah, I don't know. But I will tell you this, the whole thing about Express being integrated into ground, it might have been because of this.
Yeah, I mean it's an extremely at a 20% profit margin. There is no better time to sell that business. Just to say that there's nobody else in that environment that could buy them. That's great, but there's still other people out there that could buy that company and generate the cash that FedEx is looking for. Let's see. With optimized CSAs rolling out in some terminals, how do you see this being implemented in current terminals without without optimized CSAs? Will they be forcing the new CSA definitions, and how will they do this? You want that one, Jeff?
It's actually happening already. So they're in Panhandle of Florida. You got some contractors renegotiating. Some have new areas, some don't, that are optimized. So optimized, just so everybody, we throw this term out there, we threw it out there a week or two ago, but optimized CSAs include express in the CSAs, and not just the 5s and the 8s, but the 1030s and the noons. And it's a different, some of you on here already had some express, and that's okay. That's good. That's some express. But there's another level of it all. And there's actually more, the contract, attachments, addendums. There's a whole bunch of other things that go with it. There's some more rules like you're going to agree to more than one delivery attempt if you can't get an express package off the first time. There's some other things in an optimized CSA, along with just the type of service, the express coming over. And in those terminals, there are some redefined CSAs that don't include express. So it's interesting. Now, when that happens, of course, some of the express drivers and personnel and stuff, there's a different kind of thing. It's not fully integrated. Some of the express folks are doing quite a few of the same day on call pickups, and they're doing the 830s, and then still some DGs and other, who knows, they got other kind of specialty stuff. So it's not fully integrated yet, but that's already happening. So the questions with optimized CSA, how do you see this being in current channels without optimization? They're just doing it. They're side by side. There's some CSAs that have express and some CSAs that don't.
Yeah.
That's
when you say freight, what are you referring to? FedEx Freight is an LTL company, which stands for less than truckload. So, and they are the biggest in the business, competitors being Old Dominion, Saia Motor Freight, YRC used to be until they went bankrupt a little over a year ago. So that's what we would say by the freight. So
Well, what's the difference between, some people might not know, what's the difference between small package and
yeah,
LTL?
normally freight is a shipment over 150 pounds up to could be 2,500 pounds. Anything that is less could be 10,000 pounds. Normally a truckload weighs anywhere from 40 to 44,000 pounds. So at shipment could be 200 packages, or it could be 250-gallon drums. It could be 3 transmissions, anything that is what LTL freight, and it's normally over 150 pounds. Did that answer it, Jeff?
I hope it, simply put, it's
Most of
like,
it's palletized
That's what
freight. Yep, and then oversized. You know, you like front ends of tractors and that type of stuff you can't put on your P&D vans.
Even though they're trying.
yeah, the argument is some of the stuff that our folks handle, should that be on an LTL shipment? And the LTL guys say some of that stuff, small packages, shouldn't be on my truck. It's the continuous battle of good versus evil when it comes to that.
Here's another one. How are they justifying the much higher payouts via SSSCs and other payments for some contracts, but offering this money to all SPs? Do you understand that, Jeff?
Now, what are
SSSCs?
That's the supplemental service charge.
Oh,
Okay.
well, maybe Ms. Carey can answer that.
Well, they're not offering it to everyone because it is only issued in certain circumstances for, let's say, situations where something was missed in the value of the CSA, and FedEx comes back and says, you know, we're going to give you this amount of money every week over the next 52 weeks to make up for that. There could be many different reasons, but it is not something that is a blanket contract or a blanket supplemental for everyone's contract. It has to be extenuating circumstances to qualify for that.
And they want to keep it out of the contract, correct, Carrie? So because it's part of that value
Correct.
of that CSA.
Because right.
So hopefully that answers the question there, Doug. But yeah, it's as Carrie says, it's just not something they're offering everybody. Okay. So definitely some great questions there. And just to reiterate once again, plan accordingly this week. Volume will be light. It's going to be light carrying into next Monday with the holiday. So please plan accordingly. We will be back here next Tuesday with some more updates. And we'll see how this FedEx Freight situation plays out over. I would expect we'd know more as the summer continues. So anything else to add, Jeff, Bob, or Carrie?
Sure.
All right. Well,
Nope.
please have a safe holiday weekend and a safe, profitable week. Thank you very much.